Hi, I'm Dave Monty with RE/MAX and welcome to my video series, Everything Villages. Today's topic might not appeal to everybody, but I do get asked this question quite a bit, and that is, looking to retire in a few years, should I buy a house now and rent it out, or should I wait till I retire? Can't answer that question for you, but what I can do is help you determine whether it makes financial sense. So what I did is I put together this calculator, which will allow you to work through a bunch of different scenarios to compare what it would be to continue to rent down here versus buying and renting out. This video is a tutorial on that, so stay tuned. The question is, I'm looking to retire in a few years. Should I buy a house now and rent it out, or should I wait till I retire? So many factors go into that decision that I possibly can't answer that question for you. But what we can do is to talk about whether it makes financial sense or not. Some housekeeping items before we get started. Number one, if you'd like a copy of this calculator, feel free to email me at davemontysales@gmail.com and I'll get one out to you as soon as possible. And a little bit of a disclaimer. I am not an accountant. I am not here to give you financial advice. All I'm doing is putting together a tool here that will get you pretty close to what it would cost you to own a rental property here, as well as help you compare some numbers. So I believe the best way to introduce this tool to you is to step through the input values. For those of you who have already received my comprehensive cost of living calculator, this is going to look very familiar. A lot of the same expenses as a homeowner are the same expenses as a landlord. So let's step through these input values. The number one is which county you're going to be in. Now, 95% of the homes are in Sumter County, so we'll keep it at Sumter. I like to pick between Sumter, Marion, and Lake counties. That just affects how much you pay in taxes. Right here is like your annual tax bill. Let's pick Lake County, and you can see your tax bill goes down by about $500. All right, so but like I said, 95% of the homes are in Sumter County. We'll put that in there. Homestead exemption. Rental properties don't qualify for homestead exemption. I just didn't want to delete it out of here. The bond is not paid. I'm trying to make this as expensive as possible for you to look at worst case scenarios. However, most homes still carry a bond, so the bond has not been paid. Home value. This is how much you would pay for the home, and then how large the home is. Now, how large the home is will affect some of the utilities down here. The larger the home, more it takes to keep it cool. You can have a loan, yes or no. If I'm going to pay cash or I'm going to have a loan. If you're going to have a loan, you're going to have a down payment. Again, worst case scenario, I do not have a loan to home value ratio less than 80%. That way you still have to pay for private mortgage insurance, which is just another $100 a month. But again, I'm trying to show you sort of worst case scenario in here. Interest rate and the number of years. Now here's where we start getting into the rental specific information. I like to pick between short term and long term. Most properties here in the villages are short term rentals, more like vacation rentals, because this is a vacation destination for a lot of people. If I pick long term, I'm going to show you how some of these calculations change. If I pick long term, all the utilities that are typically consumption utilities will be put in your tenant's name, so you don't have to pay those yourself. You have one flat rate for rent all the way across here. Now, if I click over to short-term rental, I'm going to show you a few things. Obviously, the utilities come back in, and your rent changes from month to month. Here's zero, here's $4,100, here's $2,500. And now, why is that the case? Over here on the left-hand side, enable you to play with a lot of different scenarios, which months you're going to rent it out. Right? Now, if it's in green, that's the busy month. Those you can command a premium. Mid-season are in these orangey colors, and this reddish pink color here is the off-season. In this particular scenario, I am going to assume that you want to use this house for your own rental. So let's say you're going to use it 2 months out of the year during busy season, again, for worst case scenario. If I change these over here, you can see that the amount of rent that I collect annually goes up, and these numbers change over here. We'll get to these numbers here pretty quick. But again, for this purposes, worst case, you're going to rent it out for 2 months. Now, this gets a little bit complicated here, but I do take into account a view and a pool. Again, since this is a vacation destination, anything that feels like you're on vacation helps boost the amount of rent that you can collect. And typically we see about another maybe $500 per month for a view and another $500 a month for a pool. What makes it complicated is that if one of these situations exist, this is typically higher anyway, and your rents will be a little bit higher. So right now there is no pool. My monthly average rent right now is $1,400, and I go ahead and click yes, and you'll see that my average rent went up to about $1,700. The other thing that I did is that I bumped up the amount that your electrical bill would go up. I lumped a lot of the cost of owning a pool into there because chemicals and electricity average about $275, $300 a month. But I just lumped all the chemicals and the cost into this gas and electric utility down here. But for this case, let's go no. The last input value here is, did you buy the home turnkey? Which means that you bought a home that had all the furnishings, pots, dishes, golf cart, pretty much everything that you would need in order to rent out the property. If I keep it no again to keep the expenses high, assuming that you have to furnish the home, provide a golf cart. And I allotted about $18,000 for that, about $15,000 to furnish the home with rental quality furnishings, as well as maybe $2,000 to $3,000 for a golf cart, to take that into account. Another item that I haven't mentioned yet that I took into account is that I added about $7,000 into closing costs behind the scenes, and that gets buried into your monthly payment, just again to be as conservative as possible. That's it. Those are all of your input values and how they sort of affect these calculations. Now let's analyze a little bit. So I'm going to come over here, and there's some things that you need to put in because we're talking about the course over a certain number of years. So I'm retiring in, let's put it right here, 4 years. I allow you to pick up from 1 to 10 years, but let's stay at 4 years. And then here, how much is your rent going to appreciate year over year? And I took a very conservative 2%. Appreciation of your home. Now, homes in the villages appreciate between 5 and maybe 10, 12, 13%, much more this year with what's going on with the virus. The home prices continue to increase. But for a conservative standpoint, I'm going to stay on the low end at that 5%. Now, let's take a look at the numbers. Over here on the right-hand side, I showed that you would have a negative cash flow over those 4 years, and $70,000 is quite a bit of money, and you're saying, well, this doesn't make any sense whatsoever. Well, let's take a look at the total appreciation of the home. At 5%, you would anticipate that the value of your home will go up $55,000. Now remember, if you're going to buy here in 4 years anyway, you're now going to be looking at that same house at about $400,000. So a little bit of cost mitigation there. And then you also were going to, substantial tax break. I put it at 28%, again, to be conservative. Most people who probably can afford 2 homes will be in a little bit higher of a tax bracket. But to be conservative, I put you in a 28% tax bracket. So if you factor all those things in, you would be at a slight profit. What I alluded to earlier in the video is that your rental habits are going to affect whether it makes sense for you to buy now versus buy later. If you're coming down year over year and renting year over year, then you're spending a lot of money already. And so what I wanted to do is show you, if you rented basically about the same house for that same 4 years, or whatever years you choose down here, how much you would actually spend. And that's the number you need to compare. It's like, you're either going to just spend this and give it to somebody else, or net about $7,000. So the delta between the two is is about $36,000. Well, that's the tool. Hopefully it's of use to you. If you have any questions, feel free to let me know. Again, you can get your copy. It's in the description down below, but just email me at davemontesales@gmail.com and I'll send you out a copy. If you would like a comprehensive cost of living calculator, I also got a 40-page guide, buying and selling a home in the villages. Just let me know if you would want any of those as well. Please subscribe to my channel. Please hit like. All of those things help in the search engines, allow me to reach more people to help them out. I hope you have a wonderful day and take care.